Hey there! Welcome back to our channel. If you're new here, I'm so glad you decided to join us today. We're diving into the exciting world of decentralized finance, or DeFi, and specifically, we're taking a closer look at Uniswap V3 and its innovative feature, custom liquidity ranges. Whether you're a seasoned DeFi enthusiast or just starting your journey, you're in the right place. So, let's get started. But first, have you ever wondered how liquidity pools work in DeFi and why they are so crucial? Well, you're not alone. Understanding liquidity and how it operates can be a game changer for your trading experience. Let's break it down together. Uniswap is one of the most popular decentralized exchanges, or DEXs, built on the Ethereum blockchain. It allows users to swap various ERC20 tokens without the need for intermediaries, relying instead on liquidity pools. Now, Uniswap V3, which launched in May 2021, introduced some groundbreaking features that set it apart from its earlier versions and from other exchanges. One of the standout features of Uniswap V3 is its concentrated liquidity. But what does that mean? In previous versions of Uniswap, liquidity providers had to provide liquidity across the entire price range of a trading pair. This means that a significant amount of their capital could be sitting idle when the market price fluctuated outside of their chosen price range. With concentrated liquidity, LPs can now choose a specific price range within which they want to provide liquidity. Imagine you're a liquidity provider for the ETH/USDC trading pair. Instead of having your liquidity spread thinly from $0 to infinity, you can focus on a more narrow range, say between $2,000 and $3,000. This allows you to allocate your capital more efficiently, potentially earning higher fees because your liquidity is more likely to be used when traders swap within that specific range. Let's say you set your liquidity range between $2,200 and $2,500. If the price of ETH stays within that range, you earn trading fees on the swaps that occur. However, if ETH's price moves outside of that range, the liquidity you provided becomes inactive until the price returns. This gives you the potential to earn much higher fees compared to providing liquidity across the entire price range, but also comes with the risk of impermanent loss if the price moves significantly. So, what is impermanent loss? It's the temporary loss of funds that can occur when providing liquidity to a pool compared to holding the assets in your wallet. For instance, if you had held onto your ETH and USDC instead of providing them as liquidity, you might have gained more value than what you earned in fees. That's why choosing the right price range is critical in Uniswap V3. Now, you might be wondering, how do I choose the right price range? This is where research and analysis come into play. Many traders use historical price charts, volume data, and market sentiment to predict where they believe prices will fluctuate. Tools like the Uniswap V3 interface and third-party analytics platforms can help you visualize these trends and make informed decisions. Additionally, Uniswap V3 also introduced multiple fee tiers. This allows LPs to choose the level of fees they want to earn, depending on the risk they are willing to take. There are 3 fee tiers: 0.05%, 0.3%, and 1%. The lower the fee, the higher the trading volume typically is, but the risk of impermanent loss can also be higher. Conversely, higher fees may attract less trading volume but can be more profitable for LPs who want to take on more risk. If you provide liquidity in a high volatility pair with a 1% fee tier, you might earn higher fees for each trade. However, if the price swings wildly, you could face larger impermanent losses compared to a more stable pair at the 0.3% fee tier. Now, let's talk about the concept of active management. With concentrated liquidity, LPs can actively manage their positions. This means you can adjust your price range based on market trends or specific news events. For example, if you anticipate an upcoming Ethereum upgrade that might affect prices, you could narrow your range or adjust it altogether to maximize your earnings potential. So, to summarize, Uniswap V3 has revolutionized the way we think about liquidity provision in decentralized finance by introducing concentrated liquidity, custom price ranges, and multiple fee tiers. This allows liquidity providers to earn more efficiently while taking on calculated risks. However, it's important to remember that with these opportunities come new challenges, like the potential for impermanent loss and the need for active management of your liquidity positions. If you're considering diving into Uniswap V3, be sure to do your research and perhaps start with smaller amounts as you learn the ropes. And remember, the DeFi space is ever evolving, so staying informed is key. If you found this video helpful, please give it a thumbs up and subscribe for more content on cryptocurrency and DeFi. And don't forget to hit that notification bell so you never miss an update. Have any questions or topics you want us to cover next? Drop them in the comments below. Thanks for watching and happy trading!